Okay, welcome back to Accounting 101, where we're going to go over the end of Chapter 6 assignments. My equipment here, let's see. Okay. Review question number 5. Discuss some measures that should be taken to maintain control over merchandise inventory. Okay. First of all, how do you get the inventory? You order it and you purchase it. So you should have receiving reports. Make sure that anything being ordered is authorized, what you need. And you only get it from approved vendors. Checking the prices. Sometimes they have a price catalog published online. Make sure you're not overpaying for it. Once it's received, inspect the order. Make sure that it's complete. We have somebody do a receiving report. Make sure what you receive and what you order agree. Okay. Make sure it's not damaged or in any other way harmed. Inventory that is damaged should contact the vendor and discuss return or possibly an allowance. And you should count your inventory and reconcile it to your perpetual inventory records, or you have to count it if it's your using a periodic system. Know how much you should have on hand. Compare that with what you actually have on hand. Again, you can use various things like you see in clothing stores where they put the big ring or plastic clip on the sleeve for the expensive items, or Lowe's, Home Depot, where you buy an expensive tool, they got to rub it around that thing by the register and demagnetize it. So if somebody walks out the door with something like that, the alarm goes off. Record the inventory as soon as you get it. Don't wait till the end of the week, end of the month. Periodically review it for arithmetic mistakes, transposition errors. When sales are made, record them promptly and remove the items from the inventory record. And just stay on your toes. Closed circuit cameras on the sales floor, at the register, and at the doorway. All right. Number 6, under the perpetual inventory system, what are the 4 inventory costing methods, and how does each method determine ending merchandise inventory and the cost of goods sold? Okay, the 4 inventory methods are the specific identification method, the first in, first out method, FIFO, the last in, first out method, LIFO, and the weighted average cost. Okay. The specific identification method uses the specific cost of each unit of inventory to determine the cost of goods sold. Like I said, always ask yourself which ones are being sold, and the name of the method will tell you. Specifically identified ones will tell you which ones are being sold. The ones that remain are the ones that go into your ending inventory with specific identification. For the first in, first out, the earliest costs, the first items you purchased are the first ones that are sold. So those will go to the cost of goods sold. And the balance of the ending inventory is based on the cost of the most recent purchases. Okay. First in, first out, the oldest cost goes to cost of goods sold. The most recent costs end up in your ending inventory. The last in, first out method is the opposite. The most recent costs that go into merchandise inventory are the first costs to go out to cost of goods sold. Thereby, your oldest costs are the ones that end up in your ending inventory. The weighted average method is based on calculating a unit cost after every purchase that is made if the unit cost of the purchase is different from your current unit cost in your inventory. And then you just multiply the units times the unit cost, and there might be several unit costs for the cost of goods sold. The ending inventory, you're going to have one unit cost after all is said and done. Multiply multiply that by the number of units, and that's the cost of your ending inventory. Uh, 13, how is inventory turnover calculated, and what does it measure? Well, it's nothing more than the cost of goods sold divided by the average inventory. Average inventory is beginning inventory plus ending inventory divided by 2. Divide that number into the cost of goods sold, and you will get a number. That number is the number of times per year that the average inventory sells out or turns over. What does it measure? How quickly the inventory is selling. Okay. How do you calculate the day sales in inventory? It measures the same thing, how quickly the inventory is selling, except it measures it not in the number of times per year, but in the number of days per year. The day sales in inventory is calculated by dividing the 365 days by the turnover ratio. Okay. 365 days divided by the number of times a year it turns over will give you the number of days it takes to sell the average inventory, not the average weighted, the average inventory. All right. Let's see what we got next. That's 16. I gotta find where these are here. Okay, the next series of short exercises, 3, 4, 5, and possibly 6, are all based on the same information that is found right above short exercise 6-3 in the middle of the page, 6-35. And it tells us Boston Cycles started October with 12 bicycles that cost $42 each. On October 16th, they purchased 40 bicycles at $68 each. And on October 31, Boston sold 34 bicycles for $100 each. So let me get some room here and some paper. As long as I'm up, I may as well get my water. Okay. I got to go get my inventory grids. So, all right. See if I've got the right one here. Yeah, 6-3. Okay. I'll get a pen. And let's get this set up. So we're in October 1. It tells us our beginning inventory is 12 units at $42 a unit for a total cost of $504. And what I like to do, up in the upper left-hand corner or somewhere on the page, I like to label the method I'm using. Okay, so this one is a specific identification, specific ID. All I have here is the date, October 1, and the beginning inventory that they tell us. We had 12 bicycles that cost us $42 for a total cost of $504. On October 18th, we purchased 40 bicycles, and they each cost us $68. So I put it in the purchases column. Again, you've got three columns. Consider the left side, which is your purchases, the middle section, which is your cost of goods sold, and then inventory on hand. And under each of those major headings, those three sections, we have units, unit cost, total cost, units, unit cost, total cost, units, unit cost, total cost. So it may look a little bit intimidating or scary. It is really not. Now, after October 16th, we have to have two layers over here because we have inventory that we paid $42 for and inventory we paid $68 for. So I'll just carry down the top line. I have to write a little bit smaller. And then we have 40 at $68. That was $27.20. Oops, I'm sorry, I didn't put it over here. So here's our purchase. On October 18th, 40 units at $68. Total cost $2,720. Then I bring it over to this side here. I have the top line is from the line of the row above it. That's the beginning inventory, and then the purchase added to it. So I got to just put the total over here and then add them together. And that would be $27.20. And combined, that amount would be $3,224. Right here. You can see I have the 12 units at $42 for $504. The purchase we just made of 40 units at $68. Upside down here. $27.20. Combine the 540 or the 504 and the 27.20, and you get $3,224. Now, what I like to do too sometimes, just in the corner, I'll put a total number of units. Okay, so I have 12 from the beginning inventory, 30 or 40 from the purchase, total of 52 bicycles. Now, they say on October 31st, we sold some. And we have to look at the book because they identified which ones are being sold because it's specifically a specific identification method. So under short exercise 6.3, it says, assume that Boston sold 10 bicycles that cost $42. So now I'll be putting that information in the middle column, which is the cost of goods sold. So it said I sold 34 bicycles. So I'll just put a little notation in the lower corner of that block, 34. And now it's telling me that I sold 10 at $42. 10 bicycles at $42. I need to account for 24 more. Those 24 would have been the $68 bicycles, our cost. And let's see, that would be $420. I'm going to write it in that same column. And $16.32 for the higher priced bicycles. It would give me a total cost of $2,052. Okay, right here. Total 34 bicycles sold, 10 at $42, and 24 at $68. 10 times 42 is $420. 24 times 68 is $1,632. Add those two together. We have a total of 34 bicycles being sold at a cost of $2,052. Now I've got to update the left-hand section. So I had 12 that cost 42 and I sold 10. So I've got 2 left that cost us $42. I bought 40 at 68. I sold 24. So I have 16 left from the $68 bicycles. That's a total of 18. All right. So all I'm doing is looking at what I had up here in this line, subtracting the ones I sold to see what my balance on hand is. So if I had 12 and I sold 10, I've got 2 left. If I had 40 and I sold 24, I have 16 left at $42 and $68 respectively. So just do the extensions there. And what do I have here? $84. Because I have 2 at the $42 and 16 bicycles at $68 would be $1,088 for a total of $1,172. Okay, 2 at 42 is 84. 16 at 68 is 1,088. Combine those and you get $1,172. Then I want to do a recap on the bottom row here. And it's 40 units. And in the bottom row recap, all you want to do is track the units and the total cost. The unit cost would be a hodgepodge of things, so you don't want to do that. Now, I also like to do one thing when I'm doing these grids. If you notice, when it's dollars, I put a dollar sign on. When it's units, I just put the number in. That way I know whether I'm quickly looking at units or the cost of those units, so I don't get confused. Maybe because of my eyesight being so poor, I do that. I don't know. And we'll see the later ones. We'll have a couple more additions and sales. But right here, my purchases, 40 units at a cost of $2,720. Sold 34 that had a cost of $2,052, leaving me at the end of October 18 units with the cost of $1,172. And if you want to see the details, the breakdown are in the line up here. Now it says they want us to write journal entries to record the purchase and the sale. Everything was on account. So the purchase on October 16th, I'm sorry, yes, I put the 18th in there, I'm sorry. That should have been the 16th in the grid. Okay, right over here, I had 18th, it should be 16th. All right, so we're purchasing inventory, so the asset merchandise inventory is going to be increased with the debit. And it was done on account, so we're going to credit accounts payable. And we get the number right from the grid. On October 16th, 40 bicycles at $60 a piece, $2,720. Okay. So now we have to record the sale on October 31st, and it's a perpetual inventory system. So we have to make two entries, one to record the sale and one to record the change in inventory. So the sale, again, is on account, so we're not getting cash, but we're going to get the customer's promise to pay us, so we'll put it into accounts receivable. And they told us that we sold 34 bicycles at $100 a piece. That would be $3,400. And the offsetting credit would be to sales. Okay, so there's the entry to record the sale, a debit to accounts receivable, and a credit to sales, $3,400 respectively. Now we have to record the fact that inventory went down because the customer bought the bicycles and they went home with the customer. So merchandise inventory is going to get reduced with a credit because it's an asset account. And they're going to go over to the cost of goods sold, taking it off the balance sheet and putting it onto the income statement. Now, where will we get the number? Right from the middle section. What does it say? Cost of goods sold. Very simple one here. We only had the one sale, two different prices, but we're only interested in the total of $2,052. Okay. Now these two entries record the same, are dealing with the same inventory. This is at our retail selling price to our customers. This is the cost that we paid the vendor when we obtained those bicycles. The difference between those two amounts would be gross profit. Sales less cost of goods sold. Okay. Short exercise 6-4. Let me get a new grid up. And it's going to be, this time, probably LIFO. Anything? Yeah, I'm sorry, FIFO, first in, first out. FIFO. Come on, settle down here. It jumps half a page. It jumps line by line, then it jumps half a page. All right, so first in, first out. First thing I do is, like I said, you don't have to do this. I do it to make it easier on me. I don't have to think. And just put it up here, first in, first out, so I know that's going to tell me when I ask the questions which ones did I sell, the first ones I got. So once again, we have to enter the beginning of inventory on August 1st, and that was given as 12 units that cost us $42 a unit for a total cost of $504. On October 16th, we purchased 40 more bicycles, but this time the cost was $68 per bicycle. Just like before, $2,720. In fact, on all four methods, the purchases are going to be the same. It doesn't change. What changes is the cost of goods sold and our inventory on hand, our ending inventory. So now I build the inventory on hand, 3 columns, the same way I did with the specific identification method. Uh, 40 bicycles at $68 a piece, total of $2,020. Give me a total of 3224, just like before, because we have the same beginning inventory and we have the same purchases. The only thing that is changing now are the ones we're selling. So on the 31st, again, we're selling 34 bicycles. So all I did is purchases like I did before and build my 2 layers to keep them separate. How many bicycles I had at $42, how many bicycles it cost me $68, and then I put down here in a little thing on the corner how many bicycles I sold. 34 bicycles. Now I ask myself, which ones did I sell? Well, up here, first in, first out. That tells me which ones I sold. So I go to my highest layer in the cake, so to speak, or the earliest ones, and I sold those 12 of the 34 bicycles. 12 are from the beginning inventory that cost me $42 a piece. That'd be $504 right here. 12 bicycles, $42 a piece, $504. Sorry for the smallness. And if I sold 34 and 12 of them were $42 bicycles, the balance would be 22 bicycles. 34 minus the 12, and those would be the $68 bicycles. So 22 times 68 would be $1,496. Okay. Total is 34. 12 from the beginning inventory at 42, 22 at $68 for a total of $1,496. Add those two amounts together, and what do we get? An even $2,000 for our cost of goods sold. Like that. Those two amounts added together. So now I have to figure out what the inventory on hand is. Well, the 12 bicycles at $42 went out. First in, first out. And then of the 40 bicycles that cost me $68, I sold 22. So I have 18 left that I paid $68 for. And that would be $1,224. Okay. Again, I sold 12 at 42, so those are gone. I had 40 at 68. I sold 22 of those, so I have 18 left. $68, $1,224. Okay, so once again, I have to do the entry. The entry for the purchase is going to be identical to the specific identification. It's going to be the same in all 4 methods. Purchases are not, the information, the data is constant with the purchase. The only thing that changes with a valuation is the cost of goods sold and the ending inventory value. You can see if I could see the top of the page, the same thing. In fact, the sale first to record the sale is going to be identical, because the sale price of the 34 bicycles is still $100. So we're going to debit accounts receivable. And credit sales for $3,400, same as with the specific identification. And these 2 entries will be the same for all 4 valuation methods. The only thing that's changed is, again, the cost of goods sold and the ending inventory number. So now we have to reduce the merchandise inventory for the sale of the 34 bicycles. And the cost has to go over to the cost of goods sold. And that's at $2,000. And that number comes right from our middle section here. Which ones did we sell? The first ones in are the first ones out. Total $2,000. And there's the entry. That's the only thing different between specific identification, which was up here, and FIFO. Okay. I was going to write in there, but there's no good place to write. First in, first out, specific identification. $2,052, $2,000. The first two entries are identical. And they will be for the next one, which is last in, first out. So, once again, I put my method up here, which is a good thing to look at when I'm building the grid. Again, starting out with the same number of bicycles in our beginning inventory. 12 units at a cost of $42 a unit, $504. The purchase on the 16th is also identical, 40 units at $68, total of $2,720. And then I'm just going to combine those for the inventory on hand, building my layer cake. 12 units at $42 for a total of $504. And 40 units at $68, total of $27.20. Combine those two, and I get $3,224. Exactly the same thing I had for the previous two methods. Now comes the change. October 31st, we sell 34 bicycles. Again, you don't have to do it. I like to do it. I put the 34 down in the little corner of the box for the units. And now I say, which ones did I sell? Well, last in, first out. So this last purchase were 40 bicycles. Well, I only have to count for 34. So all 34 bicycles being sold are from the $68 batch of bicycles. So 34 at $68 a piece. That comes out to $2,312. Again, the middle section there. Now I have to update my inventory on hand. This is what I just did for the cost of goods sold. Which ones did I sell? The ones from the last purchase. The last ones I got in. I got in 40. I only sold 34 of those. So they all come out of the $68 batch. Okay, so now I've got to recompute the inventory on hand. The 12 units from the beginning inventory I still have. They cost me $42 for a total of $504. I had 40 that cost $68. I sold 34, so I have 6 left at $68. And that is $408. Combine that with the $504, and I get $912 in the ending inventory. So there's the cost of goods sold, 34 bicycles at $68 a piece, $2,312. What do I have left? I have the entire 12 units from the beginning inventory that cost me $42 for a total of $504. Out of the 40 I bought, I sold 34 of those $68 bicycles, leaving me 6 bicycles at $68 a piece. The extension on that is $408. Combine that with the 504, and I get the 912. So now doing the entries using those numbers. Once again, the entries for, I'm going to put here short exercise, SE short exercise 6-5. But again, the sale to record the purchase is the same. Merchandise inventory gets a debit. Accounts payable gets a credit. Of $2,720. And now we record the sale. The sale is going to be identical to what we had with the previous two methods. And it's going to be accounts receivable. And a credit to sales. 100 bicycles at, what was it? 34 units at $100, $3,400. And now to record the decrease in the inventory, transferring it over to the income statement via the cost of goods sold. And where do I get the number from? Right in the middle section, the cost of goods sold. Well, I didn't do the summary down here because it's the same. There's only one sale and one purchase. So yeah, it would be nice. Yeah, save some time and not do it. $2,312. Again, the purchase identical to the previous two methods. The sale identical to the previous two methods. The only thing that changes is the inventory that's going out to the customer, the cost, and the cost of goods sold, because we're using a different valuation method. Okay, now the weighted average cost method. Page down here. Short exercise 6-6. Weighted average cost. You can call it average cost if you want. Let me get it set up here. The beginning inventory, same thing. We have 12 units at $42 a unit, and that's a total of $504. On October 16th, we get 40 more bicycles that we paid $68 for, total of $27.20. Okay, now the weighted average cost is different. What you want to do here is you take the units purchased and add them to the units on hand. You take the total cost of the purchase, add it to the total cost of what you have on hand. So I'm going to do that first. I had 12, and I'm going to add 40. So I have 52 units. All right, add 12, added 40 to it, 52 units. Now I'm going to pick up the cost of that 40 units, $2,720, and that's going to give me $3,224. So now I have a new total cost and a new number of units. So I'll divide the total cost, the new total cost, by the new units, and I'll get a new weighted average unit cost. 32.24 divided by 52, $62. I'll show that down here. 32.24, 52 units, equals $62 per unit. Okay, so I got the units from the purchase added to what I had on hand. I have 52. The total cost of that purchase added to what I had on hand. Get the 32.24, divide the 32.24 by the number of units, 52, and I get $62 per unit. Put it in that there. So now, when I have the sale on October 31st, I have 34 units at $62 per unit, and that is $2,108. So 34 units, $62 a unit, $2,108. So now I have to do my entry. Again, the first two entries are going to be identical. The October 16th purchase, merchandise inventory gets increased with a debit of $27.20. Accounts payable, the liability account, gets increased with a credit of $27.20. And then on October 31st, record the sale, accounts receivable, $3,400, and sales gets a credit for $3,400. Same thing as the first three methods: specific ID, LIFO, and FIFO. And now weighted cost, the first two entries are identical. What's going to change? Again, the names of the accounts are the same, but the amount changes for the last entry. That reduces the inventory and increases the cost of goods sold. And I forgot what it was, so I'll look at my table, 2108. And there it is. Oh, I didn't complete the table. I'm sorry. So we had 52 units at a total cost of $3,224, and we sold 34 at a cost of $2,108. So I have to update my inventory on hand. So 52 units minus 34 would be 18 units on hand. Unit cost is $62, and the total cost there would be $1,116. My apologies. Okay, so all I did was take this information, compare it with that line there, and put it in the current line for October 31st. I'm taking 34 units out of the 52 to get 18, and I'm taking 2108 out of the 3224 to get the 1,116 as exercise. Exercise 16 and 17. Let me get there. I scroll down my electronic textbook here. Um, did I go too far? Which one are we doing? All right. 16. Oh, come on. 50. Wow. Okay. I think I finally got it. Let's see what it says here. They give us some data here for going the wrong way here. Golf Unlimited, and it tells us November 1st, the balance we had, November 6th, a sale, November 8th, a purchase, November 17th, a sale, and the 30th, a sale. And on 16, they want us to do FIFO, first in, first out, do the grid, and then do the entries. Okay. Okay, so this is going to be first in, first out. Let me put it up here. Exercise 6-16. All right, so on November 1st, we have a beginning inventory of 24, I think they were putters. It cost us $53 a piece. That would be a total cost of $1,272. So there's my grid. All I'm doing is taking the information they're giving me for the beginning inventory, inventory on hand. On November 6th, we had sold 20 units. First in, first out. Well, we only have one layer, so they have to be $53 units, $53 unit cost, and that would be $1,060. In the middle. Okay. Then all we have to do is update our inventory on hand. If we had 24 and we sold 20, we have 4 left, and there's only one price right now, $53, and that would be a total of $212. Over here, right? All we're doing is taking this amount out of that top line to get the second line. All right. November 8th, we bought 30 units, and they were $70 a piece. That would be $2,100. I put it in the purchases column, and now I have to take that information and put it together with what I had on hand before that purchase. So the price is different, so I'm going to keep it in 2 layers. 4 units at $53 a piece is $212, and 30 units at $70, $2,100. It gives me a total of 34 units. I'll just make a little notation in the corner of that block, the quantity, and combine the 212 and the 2,100 to get $2,312 in inventory on hand. Again, different price, unit cost, you got to keep them separate. Sometimes you may have 3 or 4 in there, in which case you got to use 2 lines or make a bigger box. On the 17th, we sold 30 units. So like I say, you don't have to do it. I like to do it. I have 30 units in the lower right-hand corner. I draw a line, and I've got to ask myself, which ones am I selling? Well, the method tells me which ones I'm selling. The first ones I got in are the first ones that are going out. So if I have to sell 30, all 4 of those $53 units, putters, are going to be sold. Total cost of $212. And I'm selling 30, so I have to account for 26 more. They come out of the purchase made on November 8th of 30 units at $70. So 26 times $70 per unit is 1,820, and that's for a total of $2,032. Okay, I sold 30 units. 4 from that were the first ones I had. My upper layer, 4 units at $53 a piece. The balance to get to 30 would have to be 26 units. That came off the last purchase at $70 a piece. And you get the extension of 1,820. Combine it with the $212 for the $53 putters. The 4 of those you sold. The total cost of $2,032. Now I have to update my inventory on hand. Well, the 4 units at $53 were sold. 26 of the 30 at $70 units were sold. So that leaves me 4 units at $70 a piece, be $280. No, 1 layer, 4 units, $70 a piece, $280. November 30th, we sell 2 more units. Which 2 did we sell? Well, we only have $70 units. So that would be $140. And that would leave me 2 units at $70 for $140 left on hand. Sold 4. There's only 1 layer, so they have to be $70 units. 4 times 70, 280. I'm sorry, 2 units. 2 units sold. Out of the 4 we had left, they have to be $70. 180. I'm sorry, 140. And that leaves us with 2 units at $70 for $140. I'm just going to do a recap here because we had multiple sales. And I'll go across all 3 sections. Total units purchased is 30. Total cost of the purchase, $2,100. Again, I'm going to leave the cost per unit blank because, well, we only had 1. But if we had multiple ones and it was a different one, that number is meaningless. It's an abomination. Now, cost of goods sold, what do I have? I had 20 units sold on November 6th, 30 units sold on the 17th, and 2 units sold on the 30th, for a total of 52 units sold. And here you can see that the cost per unit thing would be an abomination. You don't want to do it. But I will add up the total cost. Just to help you out, I put check marks on the units. We add those up to get the 52 units. Now we're going to add up the cost with the check marks for all the sales, the 3 sales we had. And that comes up to $3,232. And finally, you just repeat the last line for the right-hand set of figures. Just comes right down. 52 units sold, total cost of $3,232, leaving us with 2 units at $70 a piece for for 140. Now I guess we have to do some journal entries. Alignment number 2. Record the sale on November 6th. Accounts receivable, that's a debit. And sales, well, I call it sales revenue, fine. $2,380. And that is 20 putters at $119 a piece. 20 units times $119 selling price equals $23.80. That's to record the sale. We have to record the decrease in the merchandise inventory. Excuse me. So the cost of goods sold is going to be increased with the debit. Merchandise inventory and assets going to be reduced with a credit. And where do I get the numbers from? From the grid we just completed. The first sale on November 6th, $1,060. November 8th, we had a purchase of inventory, right? 70 putters at $70 a piece. So merchandise inventory in this case is increasing. So it's an asset account. It will get a debit to increase it. And accounts payable, the liability account, will be increased with a credit for the amount we owe the vendor as we bought it on credit. 30 putters at $70 each, be $2,100. Again, you could get that from the grid, but I remember that it was 30 putters at $70 a putter, $2,100. On the 17th, we had a sale. So accounts receivable gets a debit. Sales or sale revenue gets a credit. And what did we do here? $119 sale, putters, 30 putters. At $119 per putter equals $35.70. Again, this is the selling price to our customers. Now we have to do a second entry relative to this sale to reduce the inventory and the cost of goods sold, but it's going to be at our cost, what we paid for them, not what our customers are paying us for them. So the cost of goods sold gets increased with the debit. Merchandise inventory gets decreased with the credit. And we go to our grid for the 17th. and we can see that it's 2032. $2,032. All right. Finally, on the 30th, we sold 2 putters at $119 each. Be $238. And then we have to reduce the inventory for the putters we just sold, those 2 putters. And we have to increase the cost of goods sold for those 2 putters. And that will come right off the grid. Those were still $70 putters, so they were at $140. Is that all they asked for here? I think so. Let's see if there's anything. Okay, so we got to do using the same thing, using LIFO. Right. Okay, let's get set up here. LIFO. November 1, our beginning inventory, 24 units at $53 a unit, total of $1,272. Same as before. That everything's going to be the same until we have nope, no sale. Okay, well, we have a sale on November 6th. We're selling 20 units. And last in, first out, we're at $53 a unit. So that would be $1,060. That would have to be the same as before because there's only one layer. $53, 212 for the value on hand. Okay, now we have a purchase on November 8th, 30 units at $70 a unit, $2,100. And we got to build our layer for our amount on hand. $212 and $2,100 for a total of $2,312. Added the purchase. Well, we got the purchase, logged it in, and then we have to combine it with what we have on hand. And now we have to do some thinking because on the 17th we sold 30 putters. Which 30 did we sell? Up here it tells us the last ones in are the first ones out. So we sold all 30 of that purchase from November 8th. There were $70 a piece, $2,100. Again, we're under the cost of goods sold. Then we just have to update the inventory on hand by taking those that November 30 purchase out, leaving us with our original beginning November inventory of 4 units at $53 a piece for $212. On November 30th, we sold 2 units, and we only have $53 putters left, so it'll be $53 and be 106. That leaves us with 2 at $53 for our inventory on hand for 106. And now I will go through and do a tally for the month of November. Total purchases, 30 units, $2,100. Total units sold, 52. 20, 30, and 2. And then the total value associated with those, 1,060, 2,100, and 106. Total of $3,266. And then the hand just repeats the last row, 2 units for $106. And now to do the entry. Oh, I'm going to sneeze. Excuse me. So using LIFO, the cost of ending inventory is 106. The cost of goods sold is 3,266. With FIFO, as you can see on the grid, oh, come on, the ending inventory is 140, and the cost of goods sold was 3,232. So there was a difference, slight difference. We're not dealing with real big numbers here, but a difference nonetheless. And let's see what the other requirement is, or I guess to do the entries. Okay, for 6-17, November 6th, the sale will be the same as with the first in, first out. Accounts receivable, sales or sales revenue, $2,380. That is $119 times the number of putters sold, 20. And then we have to record the cost of goods sold. And reduce the merchandise inventory account. And that number will come right from the grid we just did, $1,060. So there's the entry to record the sale, and then record the fact that the inventory was lowered by 20 units at a cost of $1,060, and cost of goods sold went up by $1,060. November 8th, the purchase is the same as it would be under the first in, first out. So the merchandise inventory gets increased with the debit, and accounts payable gets increased with the credit. For the $70 putters, of which we got 30 of them, or $2,100. So now we have to record the 2 other sales on the 17th. Accounts receivable, that's a debit. And sales gets a credit for $3,570. Again, 30 putters at $119 a piece. I think that's right. 3570, yep. And then we have to record the decrease in the merchandise inventory and the increase in the cost of goods sold. We get that number right from the grid. Right here, the 17th, $2,100. And on the 30th, same thing with different numbers. Accounts receivable, debit, sales revenue credited. Two putters at $119 a piece, or $238 retail selling price. And then to record the drop in the inventory and the increase in cost of goods sold for those same two putters, but now we're using cost, not selling price. $106. Okay. I think that's it. We have the other one, weighted average cost. I'll complete the grid for that one. I may as well do the whole thing. It'll take that long. Yeah. Weighted average cost. So we got November 1st. We have 24 units at $53 a unit. Total cost of $1,272. On November 6th, we had a sale of 20 units. It would be at $53 a piece, be $1,060. Drops us down to 4 units at $53 a piece, $212. Identical to what we've had before because there's only one price. Now here on November 8th, we buy 30 more putters and they cost us $70 a piece. Our current unit cost up before that point, it was $53 a putter. Now it's $70 a putter. Total of $2,100. So what I'm going to do is I'm going to bring the units over, combine them with the previous units. Going to bring the total cost over. To the total cost on hand, get a new number of units, new total cost, divide the new total cost by the new units to get the new unit cost. So if I had 4 units and I bought 30, I'm not going to have 34 units. 30 units plus the 4 on hand gives me 34. $212 in the previous, and now $2,100 added to it. That would be $2,312. $2,312. So I have the new units, the new total cost. Just divide the new total cost by the new number of units, and we'll get a new unit cost, which is $68 per putter. Okay, November 17th, sold 30 units. Unit cost is $68 a unit. So that would be $2,040. And that would leave me 4 units at $68. Total of $272. And then on the 30th of November, I would have sold 2 more units that also cost me $68 at the weighted average cost, for a total of $136, leaving me 2 on inventory on hand at $68 with the same value of $136. So now I have $2,100 here, 52 units. Cost of goods sold is now $3,236. And I have 2 units on hand at $136. All right. So when I sold them, the unit cost didn't change, because the only time the unit cost would change is if I had a purchase at a cost different from my current unit cost. Well, we didn't have any other purchases, so the unit cost, it remains unchanged. I just have to do the math and then add it up. 30 units, $2,100 purchased, sold 52 units at a cost of $3,236. End up with 2 units, 136 in the ending inventory. You entries, and if you have trouble, email me. It'd be the same accounts we saw in the other 3 methods. The only thing that would be changing would be the cost of goods sold, and the second entry for the sales. The numbers would change for the inventory reduction and the cost of goods sold increase. All right, I think that's enough, and if not, I'll check back and do another short one over the weekend.